Hi, so this is the second video on my road to passing my first prop firm and getting funded. I want to go over a winning trade, a missed trade, and a losing trade. So here we have a winning trade that I took on USD JPY. We have multiple confluences. First of all, we are bullish on the daily. We are bullish on the H4, but here we have a consolidation and then break. So I was looking for a retest of this area of interest, which also coincides with a psychological level of 153, to then sell to the downside at least to the 100% level retracement, which is basically all the way back to where it actually bounced. So as you can see, we have already exhaustion on the H4. So the trade was taken here. We have time frame correlation in the sense that right here, this 30-minute bearish engulfing, we were looking for sells, and we entered at the close of this 5-minute candle, which also coincided with the close of the 15-minute candle. And right here, we entered at the close of this 5-minute candle, which is a high probability entry off of candlestick analysis, just like this one, which is at the close of the 15-minute. So this is what I mean by time frame correlation. So then we have two SMAs. We took shorts here and here. So at the bounce of this SMA, break and retest of the SMA, but also we have this SMA, which is the 30-minute SMA. So we also have another good amount of exhaustion here and exhaustion here, which indicates that this level is actually going to be respected. We also have higher time frame structure, which I just said on the H4. Structure was bearish. And lower time frame structure. What I mean by that is if we go down to the 5-minute, we see that the structure shifted. So right here, the structure shifted, which by the way, also a bearish engulfing indicates a structure shift on the lower time frame. So this is a structure shift right here. And I considered this another structure shift because this was the level to be broken. And it was breaking out with these high probability entries. So I was betting on the break of this lower time frame structure. That's about it. This is a winning trade. I carried it all over here to the 152. I closed basically here. And I also entered a second entry right here with lower lot size, of course, because this is another shift of 5-minute structure. So I entered here also and carried it all over here. So this is a winning trade. Then we have the missed trade. The missed trade is sad, but this is what happened. We are bullish. We were bullish on um, silver, but then H4 started to reverse, and once price basically started doing a high probability entry, but on um, the H4 to break this daily level and this SMA, I started looking for sells. So right here, this is the entry with a close under this area of interest, which is 33.5, which has been respected multiple times. Right here, we have also exhaustion, which is a great opportunity to look for sells. Also, at the close of this, we also have exhaustion at the close of this 1 hour candle, which coincides with the close of this 30-minute candle, which is why I wrote time frame correlation here. And we could have entered on a 30-minute, but we could have entered on a 15-minute. We could have entered on the 5-minute too. So by SMAs, I mean, of course, the 15-minute SMA right here and the 5-minute SMA, because right here we have a break of the 5-minute SMA. So any of these candles was great to enter, but if we were entering specifically on the 5-minute, we would have probably entered here and here because there's exhaustion to the downside, and here also as a break and retest off of the 5-minute SMA. We have 5-minute structure shift here, pretty clear. And hyperbole entries on the 15 minute, on the 5 minute, and on the 30 minute, as I've showed. We have exhaustion, as I said, so, and area of interest break, but I did not enter this one. On gold, this is my last trade. I took it right before the end of Friday. This is a big mistake because I traded not on an area of interest. So this was the trade, not on an area of interest, not on any sort of SMA, 15-minute or 5-minute SMA, and no sort of higher time frame structure because structure on gold was bearish, as you can clearly see. Price closed under this structure point to then create a retest and then go down. And I just entered on a hyperbole entry on the 5-minute, which was this, for a possible 1 to 2 risk reward ratio right here, and lower time frame structure in the sense that this 5-minute structure was broken temporarily to then go down. All right, that's about it.